The fact that over the last 4 years, the dollar's lost 25% of its value, clearly inflation wasn't transitory. We've added over $300 billion to our national debt in the last month, which is now approaching $36 trillion. And, both candidates are working for the Fed. They're both singing the Fed's book. They're both talking more lower rates and lower dollar. And so this is not going to get better anytime soon. This has never been more important on gold and silver. And I'll tell you, all the backdate sovereign coins are gone. They're all gone. Now it's just the current stuff, right? And the 10th ounce Eagles 2024, gone, sold out. Won't be any until 2025. We still have some in stock, but when they're gone, that's it. By this time next year, wouldn't surprise me one iota if we saw gold revalued to a level that would shock people. And it's an option that's staring them right in the face, and I think it's hard to ignore. So I'm not one for making predictions like this, but I think it's just too much is happening that is leading this way for it not to be understood that the narrative is being rewritten right in front of us on gold. And now with Russia coming out and saying silver too, and China buying up all the concentrate and the doré all around the world, gold and silver have never been more important.
In today's weekly recap, silver price surges to near $31 after hotter than expected U.S. inflation. Silver price strengthens and jumps to near $31 in Thursday's North American session. The white metal witnessed strong buying interest after the release of the United States Consumer Price Index data for September. The CPI report showed that inflationary pressures grew at a faster than expected pace due to a sharp increase in prices of apparel. Also, medical and transportation services became more expensive. The annual headline inflation decelerated at a slower than projected pace to 2.4% from 2.5% in August, as the impact of a sharp decline in the cost of energy was offset by a rise in food prices. Economists estimated the headline inflation to have grown by 2.3%. The core CPI, which strips off volatile food and energy prices, accelerated from the estimates. The monthly headline and core inflation grew faster than projected. The white metal struggles for direction as market participants are taking time to digest inflationary figures and adjust expectations for the Federal Reserve interest rate outlook for the remaining year. According to the CME FedWatch tool, a 25 basis points rate cut in November is highly expected. Meanwhile, the U.S. dollar is also displaying volatile moves after the U.S. inflation data release. Going forward, investors will focus on the U.S. Producer Price Index data for September, which will be published on Friday. Silver price weakens after a breakdown of the double top formation on a 4-hour time frame. The above-mentioned pattern was activated after the asset broke below the horizontal support plotted from the September 30th low around $31, which acts as a resistance now. A bear cross represented by the 20 and 50 period exponential moving averages suggests weakness ahead. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
You and I have talked at the sideline about institutional buyers that want to buy 7 and 8 figures worth of metal. That's coming. I really do believe that. We've seen it already. Interest you and I have, and when just in a normal, what I consider to be a market that has been relatively void of the mainstream participation. We've noticed that. We've talked a lot about the outflows out of the ETF that are starting to pick up again. So we are seeing the public wake up, shockingly. But even still, accumulating product is every bit as important a role of our business as is selling, rotating the inventory and constantly buying from other dealers, from other mints, and from the public. nonstop. In fact, it may even be more of a function of what we do than selling it. And that means that you have stuff that is committed. When we know it's committed, when we know that it's on its way in, we feel free to lock that stuff in and to play. I mean, that's the way the whole industry works. So if we waited until stuff was in stock, if all of the dealers did that and in-house, the business would be very, very, very different. Websites would look very, very, very different. And, over the last 4 years, it's not been uncommon for us to go 3-4 months out in buying sovereign product from Australia or the UK, guaranteeing that we are first in line. Because I say to my traders every day, I'm like, man, I don't like what's coming. And even though it's been a quiet summer, I would say to them, I don't care. I don't care if you have to go onto the line of credit. Get ready, buy it, hedge it. So we're riskless to the fluctuations, but load up on it, because there's going to come a time where there is a realization, a collective realization. I would argue we're beginning to see it, but a collective realization on a mainstream level. And that's when, again, and I'm not talking my book, I've said it forever, the biggest challenge in getting or in accumulating metal will be just getting it. It won't be about the price. Yeah, the price is going to go higher. It'll be about the availability or the lack thereof. And it's very important to underscore one very, tenet of the metals market. There is no bull market like a metals bull market, because the higher the price goes, or the crazier the world gets, or the combination of the two strengthens people's grip and resolve. Yeah, I was right. I knew it. And after all of these years of being ridiculed by friends and family for having these beliefs, and it's finally coming to fruition, do you really think that these people will sell for a profit and go back into dollars when the world has become the most scary? No. And so the secondary market just disappears. And there comes a point where it's every country for themselves, or every man for themselves. And these countries like Australia or South Africa or the UK or even Canada may look at selling product to the United States very differently than they once did, especially when gold and silver were, tertiary investments at best, second, third, or fourth in line, maybe even more after things like stocks, bonds, real estate, and other forms of insurance and whatnot. So,
in today's news recap, silver is in a hidden global bull market. Silver has been lagging behind gold significantly, creating uncertainty for investors looking for opportunities in precious metals. Interestingly, silver has been setting new all-time highs in several global currencies, highlighting investor interest around the globe. Whether this is related to the alleged silver suppression, currency divergences, or anything else is completely out of scope of our work. It may even be completely irrelevant to investors. What truly matters is that silver has printing a series of fresh all-time highs in currencies like the Indian rupee, Australian dollar. Moreover, in other global currencies like the Canadian dollar and euro, silver is inches away from hitting new ATH. It becomes clear that the global investor interest in silver is very strong, much stronger than the silver in USD story makes us believe. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Things change. And I think we are getting to that point, this collective realization. And it's all going to be square in the face of the G7. And these are the countries that are selling gold to the United States, with the exception of South Africa, and may look at doing just that very differently and be more nationalistic and take care of their own. So, yeah, I think that this is exactly how it happens. I was talking with my dad the other day and said, yeah, I don't think there'll be gold confiscation. They'll just make gold so expensive that no one can afford to buy it. And this is the gold revaluation. And I want to, I've read this before, but I want to read it one last time before we sign off. I read to you what Adam Glupinski said, but I think it's really important to go back to, sometimes the further back we go, the more clear things become. And if you don't understand history, you're doomed to repeat its mistakes. And we talk about going all the way back to, and I may have read this on your show before, but for those who didn't hear it, it's worth repeating one more time as we sign off. And this was a conversation between a man named Thomas Enders and what's his name? Kissinger. And it was a meeting that they had, and this was from the Freedom of Information Act, a meeting they had in 1974. And it goes like this. Mr. Enders says to Kissinger, it is against our interest to have gold in the system because for it to remain in it would result in it being revalued periodically. And although we still have some substantial gold holdings, a larger part of the official gold in the world is concentrated in Western Europe. This gives them the dominant position in world reserves and the dominant means of creating reserves. We've been trying to get away from that into a system which we can control. And Kissinger says, but that's a balance of payments problem. And Mr. Enders says, yes, but it's a question of who has the most leverage internationally. If they have the reserve creating instrument by having the largest amount of gold and the ability to change its price periodically, they have a position relative to ours of considerable power. They're going to revalue the price of gold. I believe that in my soul. And when you see the central banks of the world, who are the most well-informed traders on the planet, not only wickedly accumulated at a level that is increasing year over year, month over month, day over day, hiding how much they're really truly accumulating, and then speaking continuously of gold being held in the revaluation account and the prospect of indeed revaluing it, it will happen. I do believe that. And they will use it to reliquify the system, which will create massive inflation. But it is something that I think that they will do. It is a way of maybe option 3, instead of defaulting, instead of outright hyperinflating in your face, they'll revalue gold, which will create massive inflation, but will enable them to pay off a large portion of the debt. And I think that's what we are seeing. And I think you go back to 1974 after we were off the gold standard already. So they're calling it a reserve creating instrument. Gold is eternal. They understand this. The big money understands it. And he who has the gold and the commodities makes the rules. And all of the metal is heading eastward. So whether we beat them to the punch and kind of steal their thunder, which wouldn't surprise me, or they do it, I would say and I don't want to go out on a limb, but I will and say, by this time next year, wouldn't surprise me one iota if we saw gold revalued to a level that would shock people. And it's an option that's staring them right in the face, and I think it's hard to ignore. So I'm not one for making predictions like this, but I think it's just too much is happening that is leading this way for it not to be understood that the narrative is being rewritten right in front of us on gold. And now with Russia coming out and saying silver too, and China buying up all the concentrate and the doré all around the world, gold and silver have never been more important.
What are your thoughts on Andy Schectman's interview? Do you agree with his predictions? Do you think the BRICS nations could challenge the US dollar and disrupt the American economy? Could gold really blow up in 2025? Drop your honest opinions in the comments and let the stacker community know if you're investing in miners or prefer sticking with physical metals. Thanks for watching. Don't forget to check out this video over here. I'm sure you'll enjoy it. I'll see you on the other side.